Meta is down 14% in after hours trading after the company beat analyst expectations on both revenue and earnings. As promised, in this video, we are going to discuss Meta's earnings, what is going on here, and if the stock is looking like a buy now that it is dropping. This video is going to cover everything you need to know about Meta's earnings and price today. So with that being said, let's just hop right into it. All right, so as always, I put together a little bit of a Daniel Pronk slideshow that is going to cover all of the highlights from the earnings report. So right away, we can see that revenue came in at $36.5 billion, which is an increase of 27% year over year. That is an incredible growth rate to Meta's overall revenue, and they beat their own expectations as well. So the company did still grow its revenue by over 20%, which I think is just incredible. Income from operations was also $13.8 billion, which is an increase of 91% year over year. Net income came in at $12.4 billion, which is an increase of 117% year over year. And EPS came in at $4.71, which is an increase of 114% year over year. So in terms of revenue and profitability, Meta is absolutely killing it, and the business is growing on all fronts. Here we can also see family daily active people was 3.24 billion, which is an increase of 7% year over year. So more and more people around the globe are continuing to use Meta's family of apps, which is a good thing. Ad impressions are also up 20% year over year. So more people are seeing more ads, which is a good thing. Average price per ad increased by 6% year over year as well. Meta repurchased $14.6 billion of stock in the first quarter while also paying $1.3 billion in dividends. So they're very much so still focusing on buying back shares rather than paying the dividend. They just pay out a very small amount of free cash flow as a dividend, but the majority of free cash flow does go to buying back stock. The company still has a very healthy balance sheet with $58 billion of cash as well, and they did reduce their headcount by 10% year over year. So honestly, everything over at Meta looks like it is going well. And I do think that Google could take a little bit of a note from Meta's playbook right here by reducing the overall headcount, because Google is still a little bit bloated, which we are going to talk about in tomorrow's video when I do my video on Google's earnings. Now, moving on to Meta's balance sheet really quick, we can see that $58 billion of cash and cash equivalents and marketable securities. However, I do want to point out that the cash is down $9.5 billion in the first quarter. So the company is spending more money than came in, at least in the first quarter. However, if we take a look at total current liabilities, they're sitting at $28.1 billion. So when you take a look at Meta's cash position right here of $32 billion, you can see that it is higher than the current liabilities of $28 billion. So the company has a very strong balance sheet. They have more cash than current liabilities. Additionally, total liabilities is sitting at $73 billion. So their cash position and marketable securities could almost wipe out the company's entire debt position. So overall, very, very healthy balance sheet. Now moving on to the cash flow statement, which is my favorite financial statement, we can see that operating cash flow came in at $19.2 billion versus $14 billion for the first quarter last year. This is growth to cash flows of 37% year over year. So that is a very healthy increase to the company's overall cash generating ability. Additionally, the capital expenditures, which is the purchases of property, plant, and equipment right here, was only $6.4 billion on the quarter versus $6.8 billion in Q1 last year. So CapEx was actually slightly down year over year as well. And this ultimately means that Meta's free cash flow did grow massively year over year due to that significant increase in operating cash flow and the lower capital expenditures. This ultimately means that Meta had about $12.8 billion in free cash flow for the quarter. However, right here again, we can see that they repurchased $15 billion of stock on the quarter, which is more than the company's free cash flow for the quarter. So that is why the cash position is down quarter over quarter, is because they did spend more than their free cash flow on buying back shares and paying dividends. Now, I don't think that this is really a red flag at all, because Meta is a very profitable business with a very large cash position, so them spending a little bit more on buybacks is totally warranted. Now, moving on to Meta's advertising revenue by geography. And we can see in the most recent quarter here, they had $35.6 billion in advertising revenue versus about $28.1 billion last year. So massive increase in overall advertising revenue. Now, what's also interesting is every single geography saw its advertising revenue grow quite significantly year over year. So in every geography around the world, Meta is producing more advertising revenue, which is a pretty bullish thing for the company. Now, this next slide right here is the company's segment results. So we can see the family of apps revenue and the Reality Labs revenue, and I highlighted the year over year results. So family of apps did $36 billion in revenue versus $28.3 billion last year. So pretty massive growth of near 30% year over year. Reality Labs revenue last year was also 339 million versus 440 million this quarter. So Reality Labs revenue did also grow by roughly 30%, but overall this is still a very small portion of the business. And when we take a look at the percent of the company's revenue, it's pretty insignificant. It's just over 1%. Now additionally, Reality Labs operating loss was nearly $4 billion on the quarter, which is slightly less than the loss last year. But overall, the Reality Labs segment is still losing roughly $4 billion on the quarter, which is a massive cash burn. And we're going to have to see if this ever actually becomes a profitable part of Meta's overall business, because over the past couple of years, it's been losing a lot of money. But moving on to Meta's expenses as a percentage of revenue, we can kind of see that the expenses did tick up slightly quarter over quarter. But overall, the expenses as a percent of revenue are still down massively over the past couple of years, and they're kind of remaining flat at where they currently are. So Meta went through its year of efficiency in 2023, and now the company kind of looks like it is maintaining that efficiency at least over the past couple of quarters. So this seems to be about as efficient as Meta's business is going to get moving forward. Moving on to the family average revenue per person, we can see that it is sitting at $11.20, which is up about 20% year over year, from $9.47 last year. So for every person on Meta's family of apps, every daily active user, they are making more money year over year. Overall, that is a very good thing as well. So moving on to the free cash flow here, we can see that Meta did do about $12.5 billion of free cash flow in the most recent quarter. And in the trailing 12 months, they did about $48.6 billion in free cash flow now. And we can see that the free cash flow numbers for the past 4 quarters are all in that $11 to $14 billion range, which also suggests that this is about as efficient as Meta is going to get, and their margin expansion probably isn't going to be too significant moving forward, at least in my own opinion. So overall, that means that we should not be expecting massive free cash flow growth over the next couple of years here, because their year of efficiency worked, and it looks like it is pretty much over. Honestly, this was a pretty good quarter for Meta. Again, 27% revenue growth, 91% operating income growth, over 100% net income growth, operating cash flow up 30% year over year. Daily active users are up. Average revenue per daily active user is up. So basically every metric for Meta is growing quite significantly. And again, they beat their own expectations and analyst expectations for revenue and earnings. So then the question is, why is the stock down 14% in after hours trading? And in my opinion, it is because of the outlook that the CFO gave. So here is the outlook. We expect second quarter 2024 total revenue to be in the range of $36.5 to $39 billion. The mid-range there is about $38 billion in revenue for the next quarter, which is about 17% year-over-year revenue growth versus the second quarter of 2023. What this means is that Meta's revenue growth is starting to decelerate. Remember, over the past couple of quarters, they have had well over 20% revenue growth, and now they are projecting 17% revenue growth for the next quarter. So revenue growth again is starting to decelerate. However, it is worth noting that this is still very strong revenue growth of 17% year over year, which is just shy of 20% revenue growth year over year. So in my opinion, that is actually still a good thing to see. But continuing on, the CFO says, we expect full year 2024 total expenses to be in the range of $96 to $99 billion, updated from our prior outlook of $94 to $99 billion due to higher infrastructure and legal costs. So Meta did increase the low end of its expenses by $2 billion for this year, and they are saying it is due to infrastructure and legal costs. So it sounds like Meta is having to spend more on legal fees and legal costs. Then they also say, we anticipate full year 2024 capital expenditures will be in the range of $35 to $40 billion. Increase from our prior range of $30 to $37 billion as we continue to accelerate our infrastructure investments to support artificial intelligence roadmap. This is a pretty large increase to the company's overall capital expenditures. On the low end, that's a $5 billion increase, and on the high end, that's a $3 billion increase. And I think that this is also why the stock is down, because Meta is increasing its capital expenditures or its overall CapEx for the year quite significantly. This also suggests that over the next 3 quarters, Meta's capital expenditures are going to increase quite significantly from what they posted in the first quarter, which was $6.4 billion. So we probably can expect around $10 billion of CapEx per quarter over the next 3 quarters, which is going to lower the company's overall profitability and its free cash flow. So what this actually kind of suggests is that Meta's profit margins are at a peak right now, and over the next couple of quarters, the free cash flow margin and profit margins may actually come down, which could lower overall earnings per share and free cash flow per share over the next couple of quarters. But moving on, this also says, while we are not providing guidance for the years beyond 2024, we expect capital expenditures will continue to increase next year as we invest aggressively to support our ambitious AI research and product development efforts. So in addition to Meta increasing their capital expenditure targets for this year, they're saying that next year is going to be even more. So they're going to spend even more than $35 to $40 billion on capital expenditures in the year of 2025. They're not giving exact figures right now, but they're just letting investors know that, hey, this is actually going to continue increasing and ramping up, which overall could suggest that maybe the profit margins are going to continue declining over the next couple of years now. Then the CFO also says, in addition, we continue to monitor an active regulatory landscape, including the increasing legal and regulatory headwinds in the EU and the US that could significantly impact our business and our financial results. So it sounds like the regulatory landscape is getting more complex for Meta, and it sounds like it's actually starting to cost the company more and more money. And they're trying to navigate this, but they are warning investors that the regulatory landscape could impact the business significantly in the future. Now, if we head back over to Stock Unlock, we can see that at the close, Meta was worth $1.26 trillion. So if we enter in 1260 and then multiply this by 0.86, which will account for the 14% drop in after hours trading, this means that Meta is trading for a market cap of roughly $1.8 billion in after hours trading. Now, if we divide this by the trailing 12 months free cash flow of $48.6 billion, this means that the stock is now trading for about 22.3 times free cash flow, which honestly does not look too expensive for Meta, because remember, again, the revenue is still projected to grow 17% year over year in the next quarter. The one thing that I don't know is if the free cash flow of $48.6 billion is going to be sustained over the next couple of years, while Meta is letting everyone know that their capital expenditures are going to ramp up this year and over the next year as well. When we also take a look at Meta's 8-year historical average price to free cash flow, it is right around 29. So the company's price to free cash flow in after hours trading is actually significantly below its historical averages. So this could also suggest that maybe the stock is looking cheap. But again, I don't actually know what the free cash flow projections are going to be over the next couple of years now, or what the margins are going to look like with these increased capital expenditures. As I have previously said on my channel, I am not someone who can accurately predict the future metrics of Meta's business. And now it kind of seems like some investors in after hours trading are thinking the same thing, with the stock being down 14%. Now, it is also worth noting that the stock is up roughly 400% over the past 18 months. So this stock could have been priced to near perfection, or it was pricing in a lot of future growth or sustained profitability growth. So in my opinion, a 14% pullback is not too surprising, especially on those massively increased capital expenditure outlook. It's just kind of interesting that Tesla missed its analyst expectations yesterday, and the stock is up 10% today. And now Meta beats analyst expectations, and the stock is down 14% today. So that's kind of interesting that this is the market that we are currently in. But I do think that it is because Meta's stock was priced quite significantly higher versus its expectations, and Tesla could have arguably been priced low versus its expectations as well. So now let's talk about Meta's valuation and what I am doing today. Well, personally, I am not looking to buy Meta stock at its current price because I want more of a margin of safety. Because as I said earlier on in the video, and as I have said on my channel over the previous few months, I am not someone who can accurately predict Meta's business going forward. So due to this, I like to buy this stock, or I would only buy this stock if it did get what I believed was ridiculously cheap once again, like it was in November of 2022 when it was selling for a price to free cash flow of only 9. I don't think that this stock is offering me as much of a margin of safety today, again, especially with those increased capital expenditures going forward. So I am going to sit on the sidelines now. I'm going to keep it on my watch list, but it is not cheap enough for me to want to buy right now, at least personally. But with that being said, let me know what you all think down in the comment section below. And if you did enjoy this video, then please remember to leave a like on it. And if you're new to my channel and you want to stick around and see more earnings updates as they continue to come out over the next couple of weeks, then please remember to subscribe to my channel as well. Additionally, if you want my real-time thoughts on earnings, or if you want to ask me additional questions about the videos that I post or my portfolios or anything like that, then consider joining my Patreon, because you get a lot of additional benefits beyond what the YouTube channel gets. The Patreon is also the #1 way to support my channel and all of my work that I do here on YouTube. But with that being said, thank you all so much for watching. I truly do appreciate it. And I'll see you all tomorrow in my Google and my Microsoft video.